AMD is quietly breaking out for one of the strongest setups I've seen all year. We're talking about a stock that just ripped through all-time highs, y'all. And most traders are now either trying to play catch-up or they're waiting for confirmation. The question isn't if AMD is strong, it's whether smart money is truly positioning next. And in this video, I'm going to break down candle by candle so you can actually see what is happening behind the charts. Because trading ain't about predicting. It's about preparation. It's about being in position when you see smart money is putting footprints where we as retail investors and as retail traders can make the best possible move. I'll be the first one to tell you that I'm truly an NVIDIA fan. Like, I just believe in it. I know what it is. Now, because Lisa Su and Jin Wang are cousins, you know that brilliance walks in her blood. Now, I don't like the balance sheet that AMD has, but I cannot negate that it is a huge player in this AI game, especially with the partnership that it just did with OpenAI. Now, I don't agree with it giving away some of his business to being that, but I also understand that you got to position yourself when you're going up against an NVIDIA and a Broadcom. Sue is 100% playing chess, not checkers, because she has to be a part of this game. And so in this video, we're going to break down what's happening, who getting trapped, and if you're a new trader and you're trying to learn a chart, this will be a really great video for you. Let's go. So right now we're looking at the daily chart. As my new traders, what I want to do is show y'all something right here. So as you can see, AMD was in a downtrend, right? So here's what we had. We had the previous all-time high, which was here. Let's mark that out, right? Because that's going to be essential for us. So we had previous all-time high right here. And what we'll do is we'll mark that on our thing as previous all-time high. We'll mark that up there. And then I want you to show you something. So after that, you had a sell-off, right? So then you had a lower high right here. So you can go lower high. Let's open it up so y'all can see it. All right. So you had this gap down. So you had a lower high here. And then you had another lower high here. Right. So now here's what I want you to pay attention to. These become essential for us, because we're going to come back and talk about that. So here's what we want to understand about that. So a lower high means the stock came down. It's coming down, but it's also accompanied by lower lows. So you have a lower low here, a lower low here. Then you have another lower low here. Then you have another lower low here. So what that tells us is we needed to come right back over this 187 before we have what's called a breaker structure, which means we've now broken structure to the upside, which tells us that buyers have reclaimed momentum. But I want to show you something here that's really, really, really interesting. So you have this low right here, but this low then is predicated behind this up move right here, right? But then from this up move right here, remember, we are still beneath our 187. So because we're beneath that 187 means we have a macro, which means bigger picture downtrend, but we may have a minor, a micro uptrend right there. What happens? So now remember, I want you to show you something right here. And so then here, this whole range right here is what we would call consolidation. Or it's ranging, right? Which means it's not going too high, it's not going too low, it's staying in that same range. But then on top of that, I'm going to show you something. We see that it breaks that with this green candle right here. It breaks out of that range, but then goes where? Right back to 187. So at 187, what we're seeing is we're seeing at 187, we are seeing the sellers defend that range. How do we know? Well, because they did it over here, right here at this part right here at 187. We saw them do it right here again. Right? We saw them defend 187, push down. We see them hit 187, push down, which means sellers are defending that area. They're not letting buyers get there. But then right here at about 141, we see buyers say, hey, this is far enough. We not letting y'all do this no more. We're going to stop it right here. Right, so then we get this range inside of this box, which is up and down. It's kind of a wide range. But then because we know 187 is a zone, so what happens at 187 is it is called a supply shelf. But also, if you pay really close attention, you see those wicks at the top. And those wicks at the top become a form of liquidity, which means the market is going to take anything right there. There's some stop losses up there, right? And so there's some people saying, hey, if it breaks this, we're going to go up there. Some people saying, there's some sellers saying, if it breaks this, then it's going to go to the upside. So what the market typically does a lot of times is it'll touch it just to get those stop losses, take that money. I call that armed robbery, right? It's going armed robbery, take that money, and then come back down. So because this is a daily, what happens is we had 3 opportunities to get past that. Right, notice it come down a little bit more. Let's just get real close. Let's get as close to it as we can so we can see. So it's a 187.10. So what we see here is that it hits it 3 times. We have 3 days in a row. 1, 2, 3. We see a green candle, red candle, red candle. 3 days in a row, it goes and snatch that. It goes get that. Nope. So that tells us that 187 is 100% a huge line in the sand. The sellers are just defending that. And then what happens is, the next thing that happens is we get past the 187. And then what happens? It comes back down. So then what happens is they sell off. That sell off is 100% has to happen. So what I want to do is walk us on this whole journey. So now the sellers push that down. And then we get this bottom out right here at, which is 121. Now, I just want to take us where we going at from 121. Now, mind you, we are still in a micro downtrend, right? We are in a macro downtrend, which means bigger picture. We're in a bigger picture downtrend. One, because we haven't reclaimed 187. And from 187, the sellers pushed us back down. So now we see the buyers reject 121, which gives us another what? 121 gives us watch this, a micro uptrend, which means small, internal. But then we see there's a fight there as well, right? So then we come back up, and now mind you, watch what this is. This is at the top of our what? Consolidation box. I just want to show you some things that's happening so we can truly understand, so I can get to where we are today. Now notice that. That's not coincidental. That's the top of our consolidation box. Now, if we go back a little further, here's what we saw. We saw it took for AMD to break this box before it went up further. Well, what happens this time is now the seller said, we not even letting y'all get that. We gonna stop y'all at this box because we know when y'all get past this box, y'all get a little too, y'all go to feeling y'all sell too much and y'all go to thinking y'all gonna run up. So now we gonna shut that down right now. So they get exactly to that same spot, 174, push them down. Again, we just trying to get to where we are today currently. So then what happens is we fall down some more. Right, so what we see is we see this big fall down right here with AMD. Now, then we have something beautiful happen. Now it falls from there all the way to here, which is $75, and that is in April. Right, falls to $75. From $75, they say, you know what, this is low enough. It goes into these things. So now watch what we have here. We have a low here, and then we have a higher high right here. We have a higher high right here. Boom. Then we have a higher high here. Boom. Now, initially we've now broken this structure right here at the bottom. We've broken that neckline, right? So sellers and buyers are now positioning themselves, right? And we just walking through it, right? And then we have another higher high here. Notice, it has now become another what? Break of structure. So now they broke another neckline. Notice they broke that neckline, and this was where you saw liquidity at. You saw these stops right here. Liquidity, the market did what? It broke that, it gapped up right here, got some liquidity because of that previous neckline, got some liquidity, shot all the way up. Now, mind you, it comes right back down, grab that liquidity again at 148. At 149, grabs that liquidity, shoots back up, grabs that liquidity again, goes back up. Now, I just want you to see this right quick before we really get into where we at. You see the phases that it went through. So you're starting to see different levels, different things take place. But remember, our number one line in the sand, even though this is a massive run-up, is 187.10. That is a pivotal part for buyers. Buyers really need to get past that because that is a demand show. Now, let a supply show. Now, let's see it. We see they guarded it here, boom, 1 time, guarded it here 2 times, guarded it here 3 times, right? So we see that 187 is a pivotal line in the sand. And so one of the things I like to tell all our people is, like, if we can understand the story that's taking place, historically, we can understand what's the story that's going to unfold in front of us. And so that's what we're looking at now. How does this story unfold in front of us? So now let's get into it. So now we see this huge gap up. So let me take this off the screen because we don't need that no more because we broke that. Remember that liquidity down here. We done broke that. We don't need that no more. Now, this is the one that really is important for us. I moved that down a little bit by mistake, and it's that 187.10. That's the exact number we're looking for. So now let's really get into what this video is really about. So I wanted to take you through a story so we can get us here. Now, let's talk about this. So we see this line is where we need to be at. So we see this is holding the game. Then we get this huge gap up. Now, once we get this gap up, we got to mark this right here. And the reason we got to mark this is because this becomes what's called a liquidity pool. This tells us that there's orders right there, that what happens is those orders right there have gotten skipped over now. Because this gap happened overnight, those orders are not filled, right? And the market needs those orders to do what? Push up or push down. Put this in your brain. The market is always looking for some form of liquidity. All right, now let's go through it. So you get this up. Now here's where the story gets real interesting at. So it gaps up to this area right here, which is what? 226. Now, what happens is everybody jumped in when they saw that 226 on Monday. Well, those buyers that jumped in late to that rally, if you wasn't in it the day before, which was over the weekend, that Monday, if you wasn't in it over the weekend, then when you try to jump in Monday, you got what's called trapped. Why? Because it goes from from 226 all the way back down to 203. So I want you to write that on your notepad, 203. Right? That becomes Monday's low. That's Monday's low. Now, mind you, look at the gap. So you have a gap at 171 all the way to 203. Now, mind you this. Here's the thing I want us to really pay attention to. It needed a massive jump to get us above that 186, 187 mark because the sellers were defending that vigorously, meaning it was like, hey, we not letting y'all go past this between normal trading hours. We not letting y'all go past this. So the deal came out between AMD and OpenAI, and that was a massive deal that made that massive gap up. Now, what that gap up did is it skipped all those orders at the bottom that would have probably got in during the previous day. So now what happens is when the bell opens, it stops those people out. People who were saying, hey, if it go past this, they automatically get stopped out once the market opens. So that becomes new money that pushes the market up most so because the stops don't work on the weekend and the stop losses don't work after hours. So now when the market opens, all of those stops get taken out because previous historical data said that 187 was a line in the sand. So now all of that money becomes institutional money that pushes the stock up more. Well, when it goes up to 226, the seller said, we not doing that. Well, why did it go up to 227 like that? Well, that's previous all-time high. That's previous all-time high, which means what? They had some people that said, the market says, hey, this previous all-time high. Nope, push it back down. So now we say it pushes all the way back down. This is an institutional stop. This is a footprint. So from 227 all the way to 203, we see this large red candle, right? That's a bunch of people now that got caught inside of that gap up. Oh, this is so good. There's a bunch of buyers that got caught inside of that. They trapped now, right? They trapped. So now one or two things happen. Either you realize you get trapped and you sell, which adds more to the downside, or you saying, nope, I'm going to hold on, I'm going to hold on, I'm going to hold on. Well, come the next day, what happens the next day, Trap? Well, we see it opens at 215, goes up to 218, and then does what? Push back down. So now Monday and Tuesday, all AMD buyers got trapped. They got trapped in there. How did they get trapped? Well, they got in because now it gapped up. Remember, it closed Monday at 203. So when it opened, remember, top of the red candle is open. It opened at 214. So people saw that gap up and said, oh, it's about to run back up. So they try to catch it late. So what happened? It went from 214 to what? 219. So people like, yep, it's about to run back up the previous all-time high. And then what happened? Trapped them in, pushed it back down to what? All the way down to 209, but then closed at what? 211. So now you got Monday and Tuesday late buyers trapped in the AMD call. So then Wednesday happens. So what happens Wednesday? Wednesday, it opens actually lower. It opens higher, I mean. It opens at 213, falls down to 210. Some people jump in, and then it gets explosive. This large green candle is an explosion of buyers. So then it shoots way up. Now, we got to mark that off on our calendar, on our chart. Why? We got to mark that because we had a new day. And so we're going to mark that right now on previous day's high. That's what we're going to mark that. Boom. So we know what the previous day's high was. And then we're going to come here and mark, watch this, previous day's low. Now, we got to mark that. Those are essential because now we know the playing field that we in. So then today what happens is it opens, right? And then it sets a new all-time high, right? So we mark that off, all-time high. So it sets a new all-time high today and then does what? Sell off. Let's change that. Man, I hope y'all walking with me on this right here because we gonna really get into what's about to happen. So now what happens is we get a previous all-time high, and then once we get the previous all-time high, and it sells off. So now the people from Monday and Tuesday, they got their money. They was able to get out Wednesday. It was like, yo, we got our bridge, y'all. We good. But then there's some people that got in today because it opened at what? 236. They got in today, 236, ran it up to 240, but they got trapped because the seller said, yo, y'all going too far. Y'all going too far. But now here's what we know. We know that the current all-time high now is going to have orders on top of that because now the sellers have a new area to protect because they don't want it to break that. But also we have a previous all-time high. I mean, we have a previous day high and a previous day low. So now I want to get into that because I want us to understand that. Because we have the previous day high, that level separates a breakout from a bull trap. That's right. Below that zone is the previous day's low. And that tells the real story because this is where the smart money waits for new entries and discount entries, right? I want you to say that. So when you look at the previous day's low, that is what a smart money say. And you see that wick right there? That becomes a new area for entry, which is 210. So I know you're thinking like, wait, Trap, why would I wait to 210? Well, you have a support at 227, which was the previous all-time high. Not the previous day's high, the previous all-time high, which we have at the green at 227.30.26, that becomes a support. If it breaks that, we say, okay, if it breaks that, it comes to 210, and then 210 becomes where we know the smart money could get back in that. So then you give yourself another thing. You say, what, Trap? What if it falls to 203? Well, if it falls from 240 to 203, then we got to tell ourselves it's going to get that liquidity. It's going to get in there and get those pools. Now, some people say all gaps get filled. Not all gaps will get filled, right? Because the market is always looking for some type of liquidity. And they can find that liquidity at the previous day's low. And they can find that liquidity again. And you see that wick right there. That tells us that, right? That tells us that. So now I want to explain something to you that's essential. That range between 210 and 187 in the chart, every candle tells a story. Greed at the top, fear at the pullback, and then conviction on the breakout. The goal for us isn't to predict the market at all. It's to understand what emotions are driving the market. If you can read the emotion on the chart, then you can truly read the chart from a different perspective. And that's all I want us to do right here. We walking through it. We saying, oh, here's the areas where we see emotion being built up at. Now what I want to do is I want to go to the daily. So we see this already, all-time high. We know sellers are going to try to defend that. Previous day's high becomes a form of, hey, what's happening here? But we see we've already broken previous day's high. So our support really and truly is at 227. That is support. Previous all-time high is a support area because it broke that. Remember, resistance becomes support or support becomes resistance, right? So from there, the liquidity, first round of liquidity is at previous day's low because you see that wick right there. That's a rejection, but it's also saying, hey, there's some liquidity right here that the market can grab and go back up with it. If it falls from 210, then anywhere between 200 and 186 is where a bunch of unfilled orders are at. So that's how you looking at AMD. All right, but let's go deeper into this chart. Now let's go to our 1 hour chart. And this is where things really get real critical at for us. Because now we have more data. And the more data we have, the better we can get at making a right play. All right, so we see this, right? Now look at that 120. Now I want to do something for us right quick, and I want to show us something. I want to pull out my Fibonacci, my fib retracement. Now we can do this one or two ways. The first way is we can go from the low of the current move, right? And the low of the current move will put our 50% retracement at about, I'm going to just mark this so you can see it so you ain't guessing. About 221. So if it came from all-time high, new all-time high of 240, and it came to 221, 221 is a 50% retracement. That means AMD has retraced 50%. That's a good move, right? For an investor, it done broke support, but still, so watch this. It has broken support of 227, but as long as buyers can keep it above 221, you're actually still in a good upward trend. Like buyers are still in control if you can keep it above 221. So mark it on your paper, right? We may break support of 227, but if we stay above 221, buyers are still in control. Now, or some people can say, well, I'll go from the lowest swing, and the lowest swing can be here at 227. I mean, the lowest swing can be here from the gap, right? And then that will put your 50% move right at the liquidity box, right at that liquidity pool. So it depends on where you want to use it at, because you go from swing high to swing low. So you can be the overall swing low or the swing low of the current move. So I say you pick any one of those as your 50% retracement. But here's the thing about that. You know for a fact if it retraces 50% on your big swing, that the buyers are not in control no more. Because then you've broken you've broken previous all-time high, you've broken previous all-time low, and you've gotten right back to the gap up. So you know for a fact that now sellers have now took a huge stance on where you want to go at, right? So as long as you understand that. Now we put our fib back. We see our 50% retracement is at 221.95. We like that. So as long as we stay, so if we break previous all-time high and stay above 221, we good. If we break previous all-time high and then break through 221, you know for sure sellers have now taken control. And then at that point, we've had a consistent row of lower highs and what else? Lower lows, right? So we know that as from 240 to 221, to break 221 puts us in a micro downtrend, which can also be considered a micro pullback because it had a lot of steam. Now, here's what I want us to understand as well on this. So notice, now you can see the thing I talk about the sellers getting trapped really good. So you have this gap up that takes place right here, and look at this, right? You see it, boom, sellers reject it. And then we just go further down. So all of these buyers are trapped. Remember, from the gap up, buyers just get trapped. And then we have another gap up. Buyers get trapped. So previous day low. Now watch this. It stops at previous day low, which was Wednesday. Look at that. Today is Thursday. It goes previous day's lows. It touches it and then shoots back up. Mind you, the green candles open here. So it opened at what? 213. It touched previous day's low and then did what? Shot right back up, right? And then it came to all-time high, created that wick, shot right back up. Now, let's make sure we on point right there. Previous day's low is 210. So what we have here is confirmation from our daily candle and our 1 hour candle, right? So what I want us to pay attention to is this. What's next in this scene? If AMD holds 235 to 240, then we can see a continuation to 260 happening, which is good. The bear case, if it breaks 210, then we could retest that demand zone at 187 in that area, and that's where real opportunities reload. Either way, it's a trader's playground. We got to pay attention to volatility and volume. Now, the lesson in here is this. You don't have to predict every move. You don't need to know everything. You just need to know where are the points for you to get in at. The edge that you create is your discipline, and keep that down. Most traders just trade green candles. That's what they chasing, right? But we want to understand opportunities, right? So whether AMD breaks the all-time high and cools off, remember the price is the mirror of behavior, y'all, right? And where you can see behavior at is where you can trade with clarity and not emotion. And that's what I want y'all to do. I want y'all to start trading with clarity and not emotion. So here's what I want you to do, man. I want you to comment below and let me know what you see happening. I gave us the pathing situation. So if it breaks these areas, again, let's go through it again. We see all-time high. If it breaks past to previous all-time high at 227, we know what's happening right there. We want to make sure it holds that, right? If it breaks all the way down to previous day low, which is 210, then we know that can be a load up. But we are in a macro uptrend. So AMD is on a ball, is on a roll. There's money to be made. And so it's your boy, the Wall Street Traveler. I hope you got a lot out of this video. I hope I helped you a lot of this video. Let me know if you want me to do some more charting videos like this, man. I love it. I love to help us out. We see it right there in front of us, and we can follow this moving forward. We looking for supports. That's where it can retest and, go breakout. Because the breakout tells us that there's confirmation of what's going on. Right? So we know markets don't just run straight up. They're going to hit these levels and come back down. So it's our goal to understand what are the levels that we are looking for to get right back in the trade to keep making money, because the market goes up 76% of the time. It's your boy, the Wall Street Traveler, man. Make sure you like, make sure you subscribe, subscribe to the channel, man. Just show me some love. If we making some money, whoop-de-doo. If we don't make some money, let's go, man. Salute.